Our next speaker for the second plenary has recognized as a Forbes Asia 30 Under 30 honoree in the Finance and Venture Capital segment. And he is the co-founder of Policy Street, an insurance tech company, a founding member and partnership director of the FinTech Association of Malaysia. Without further ado, please give a warm welcome to Mr. Wilson Beh, the co-founder and Policy Street and partnership director of FinTech Association of Malaysia, as he will be sharing his presentation on digital economy initiative.
All right, thanks, Sophia. A very good morning, ladies and gentlemen. It is a privilege to be here in this morning to talk about digital economy initiatives. My name is Wilson, and it is an honor to be here to engage with you. I hope that the next 25 to 30 minutes or so is an engaging session, is a sharing session between two ways. Because I myself run a SME as well. But my SME is built upon a technology DNA. The challenges that you are going through, I could understand as well. But perhaps throughout the past 3 to 5 years of journey in this digital transformation process, I could say a thing or two of what and how we have overcome the challenges. So I'll be sharing on 3 key things. The first is, every day we go through our newspaper and we read a lot of key buzzwords. Industrial Revolution 4.0, digital economy, big changes are coming, robots are going to take over the job. But what exactly is digital economy? So I'll spend some time to show a few examples and also the overview of digital economy. And secondly, I think it's very much relevant to you. What are the key digital initiatives being championed or being run by the state and also the government? And I think also very crucially is how do we, SMEs, embrace digital transformation? I've compiled essentially a few key research reports done by consulting firms and also from my engagement with tech companies and also from my own experience. There are a few key takeaways I believe that it will be helpful. And last but not least, I will do a quick summary. So, may I know any one of you who has gone through a business school or, sat in at least in an economics class, you probably will have seen this slide, right? The quality of life of mankind took off significantly after the first Industrial Revolution 1.0. And today, you could see the quality of life or even GDP growth is rapidly advancing as we live in what the experts would call IR 4.0. So later I'll explain in details what exactly is Industrial Revolution 4.0. It essentially has a lot to do with our lifestyle, in how we engage with people, and how we deal with different business models. In many, many years ago, I used to play a game. This is called the Age of Empire. I'm not sure whether you have played that before. Age of Empire essentially is also riding on Industrial Revolution. The game started where you started as a hunter. You hunt for whatever you want in terms of your food, in terms of rice and water. You had to hunt for one thing. I think the economy, perhaps many centuries ago, started like this. And slowly it evolved into what they call agrarian economy, where farmers start to plant and they will call this plot of land their assets. And slowly, with technology, the Industrial Revolution 1.0 started with using steam energy to mechanize production. I think that was about 100 years ago, where automobile technology was brought to the world. And about 30, 40 years ago, when Bill Gates and Steve Jobs, about 20, 30 years ago, they started what we call the IT era, or the computer era, where we got to engage with people across border. The first email was sent about 20 over years ago. PayPal was introduced about 20, 30 years ago. But today, we live in the most exciting era. Why? Because we are most connected like never before, at least electronically. Because I have one younger brother. He's 7 years younger than me. He is very connected. He was telling me, "Go, you belong to the Facebook era. For me, I'm the Instagram or TikTok era. You are." But when I see how he engages with his peers, I'm not sure whether they are as connected physically in the real world, but they are definitely as connected or even closer in the electronic realm. And this connectivity has been exploited by a few large companies. For example, Mr. Lee was mentioning about the 11 November, Taobao or Lazada or Shopee. I'm sure most of us would have bought something there. These companies, they are leveraging on connectivity because they know exactly your spending behavior, your lifestyle, and they are occupying all this in the most precious data that they can target to upsell and cross-sell you better. Question is, as you run your SME, as you run your business, how do you understand and get insights of your customer data? This is where we are going to discuss even further. So, what is digital economy? I thought Deloitte has put it in a very succinct manner. The digital economy is essentially the economic activity that results from billions of everyday online connections, not just among people, but also through businesses, very important when you do trade, devices, especially our smartphone or physical devices, data and processes. I think this is the emblem or the summarized key version of a digital economy. And if you look at a few countries or a few cities or companies who have embraced digital transformation, I believe they are also standing in the front curve in this era. So the backbone of the digital economy will be these technologies. I think you'll be quite familiar. First of all, robots. I think there's this robots which has an artificial intelligence in the mind. She's called Sophia. She has a citizenship with Saudi Arabia. I think a couple of months ago she was in Malaysia and she had a word with Tun M. And so there could be one day where a robot could overtake the world, maybe. But what is interesting is the automation and also the artificial intelligence behind robots, number one. Secondly, simulation. This is a lot to do with data. Third, system integration is a lot to do with processes, especially if you're in the manufacturing business. System integration will be something relevant to you. Internet of Things, I will share more in details. What is Internet of Things, especially later on the business study of how a traditional retail shop embrace IoT to understand their customer better. So I learned about the insights of this retailer in China when I was participating in the Alibaba Netpreneur program in this April. So I was spending 2 weeks' time in the Alibaba HQ. And Alibaba today, they are helping a lot of SMEs in China to really transform and adopt their technology. Cybersecurity with digital economy comes with risk. And this risk is not just on our traditional risks. Cybersecurity, millions of dollars would vanish. For example, if you have read of news, I think it was transpired about 1 or 2 years ago, some crypto exchange, because of certain fraud, the tokens just vanish. So cybersecurity will be very important. Cloud computing, I think there are a lot of discussion on cloud data. How do you store your data in cloud instead on just on your physical presence? It will be able to help you to reduce your costs and also to compartmentalize your different data. Manufacturing and AR and big data. So these are the holistic technologies which form the backbone of digital economy. So these are some of the leading tech startups, many in FinTech, e-commerce, logistics, and I'm sure, as an individual, we will have a few icons on our first page of our smartphone, whether it's Facebook, WhatsApp, LinkedIn, Twitter. So the question is, what do they have in common? Do you know what do they have in common? Sorry? tech? Yes. Most of them, they are tech companies. That's the first thing. That's right. Secondly, most of them have been only established in less than 10 years, or maybe at most Alibaba 20 years, but Facebook I think is less than 12 years, Uber less than 10 years for sure, WhatsApp about 10 years, but they are valued at a valuation which is even higher than the largest listed company in Malaysia. Third, perhaps you may say the founders make a lot of money, at least paper gain, especially with the recent WeWork debacle. You'll be quite shocked to see how some of these founders run a company, but not all are like that. But I think what is a key takeaway from these new emerging or new business models is that all of them, actually, they are data company. What they do, of course, they are in different verticals. They are offering different services. But the core of their business is actually in data, which I think data would be the most important element in your business and also in this era of digital economy. So why do I say so? Because data is the new oil. After our CPO and also our gas, oil and gas, of course these two oil are the key engines for Malaysia economy. But if you look at our competitors in Singapore, even in Indonesia, the government and also the private sector has stepped up to really focus in understanding data better. So if your business is in the process of generating, analyzing, and processing data, I think it will be very, very powerful. In the past, who are some of the biggest companies? We have banks, CIMB, one of the leading regional banks. Why they are a leading player as a financial service provider? Because they have the data of clients. They are able to provide upselling and cross-selling opportunities. It's about data. So when it comes to cities or countries, I thought this is quite interesting. I feel, I visit Hong Kong regularly, especially when it comes to the FinTech seminar and conferences. And it's quite upsetting to see how Hong Kong is going through this turmoil. But as I read and talk to my friends in Hong Kong, I think the fundamental issue is really about uncertainty and insecurity faced by the young people. Hong Kong, about 20 years ago, when they first so-called rejoined back to Greater China, they contributed about 25% of GDP to Greater China. Today, the figure is less than 3%. And if you look at Shenzhen, which was a fishing village, I think in the 80s, today, their GDP in total, not GDP per capita, but GDP in total, has surpassed Hong Kong for the first time. Of course, in terms of per capita, Hong Kong is still way advanced. And also to credit and to note, Shenzhen has a 12 million population. Hong Kong is about 7 to 8. But Shenzhen has taken a different approach. They are focusing a lot more in technology. The likes of Huawei, ZTE, and the rest, they are all stationed in Shenzhen. And today, if you go to Shenzhen and you go back to see Hong Kong, they are quite drastically different in the economical focus. Hong Kong, as we all know, they are still very much focused in services. I think they are still a global leader in services, especially in financial services sector. A lot of state-owned enterprise in China still use Hong Kong as a platform to get listed. Even Alibaba is still putting their trust in Hong Kong. Whereas Shenzhen is different. Shenzhen is really about technology. So Hong Kong, you have two key pillars, financial services and property. Whereas Shenzhen is focusing in digital economy. And this is the difference in terms of the pace. So question to Malaysia and also to SMEs, if you look at our own, if we were to grow continuously as a business and also as a country, I think it's very important for us to fully embrace digital economy. And I totally agree with what Mr. Lee was mentioning. It is the execution that matters. So digital economy is the new frontiers for SMEs. I think these are some of the highlights that was also shared earlier. But what is interesting is that under the shared prosperity vision of 2030, the government aims to achieve the followings, meaning there is continuous commitment in the SME sector where the government wants to bring up the contribution to the overall GDP from 30% to 50%. I think this is a very strong commitment. And secondly, I was summarizing some of the highlights. There is also a top-down commitment to create 30% high-tech companies from SMEs in the manufacturing or even services sectors. Essentially covers everything, manufacturing and services. So again, you can see two things. SME is still very, very important. And secondly, how can SME evolve technologically to advance in the next 10 years? These are some of the key highlights from Budget 2020. I won't bore you because these are all public knowledge, but I thought these are some of the key items relevant to SME. First, I think Mr. Lee mentioned before as well, you can get up to 5,000 ringgit matching grant if you embrace or subscribe to electronic point of sales. If you run the stores, you can subscribe to certain terminals that you can allow your customers to pay apart from just receiving cash. So enterprise resource planning, electronic payroll, so you can actually claim up to 5,000 ringgit. So it's free money. Go grab it. I'm not sure whether it's you'll be starting at next year. So the first 100,000 SMEs will be able to get it. And the rest of these incentives. So please grab it because these are, in a way, our own money anyway. But what is also interesting is on an overview basis. These are some of the key initiatives being initiated by the government to really spur the growth of digital economy. First of all, they talk about lowering the broadband price. Secondly, 5G speed. I think 5G is very important. We need to be connected on the internet before we are able to embrace digital economy. Even introduction of digital social responsibility. I'm not too sure how is it defined, but it's interesting. Digital social responsibility. Customized incentive to attract more, not just Fortune 500 companies, but also global unicorns. These are tech companies. The likes of Alibaba, Gojek, Grab, and the rest, to set up more offices here in Malaysia so that we get to enjoy the spillover effect and also technology transfer. So digital economy is clearly a national agenda. So if we are able to follow through, I think SMEs will be benefited. And I will also bring your attention in the FinTech or financial services agenda. PayNet, Bank Negara, Securities Commission of Malaysia, and some of the private sectors are actually pretty progressive in the entire financial technology space. So I personally run a FinTech company. I was an ex-banker, and I left to run my own FinTech startup. We are approved financial advisor by Bank Negara, being a tech company. So as I engage with regulators and business partners, I can see the general mindset is very progressive. Do you know that in Malaysia, we have already issued licenses to peer-to-peer companies, equity crowdfunding companies, robo-advisors, even crypto exchanges. And whereas in Bank Negara, there are also frameworks such as Sandbox to try different ideas. ICTF is something very interesting. Today, when you go to, let's say you step into a mall nearby, would be, let's say, a Starling Mall. Some of the F&B outlets will put a lot of QR codes, whether it's payment company A, B, C, D. And you need to scan the right QR code to get your money through. Let's say you're using wallet A, and then you scan the QR code of wallet B, the money cannot go through because the interoperable QR scheme is not yet available. So the government is championing this. I believe in the next few months, it will be implemented across nationwide. Meaning, let's say you're using, give me a name of a wallet. Touch and Go, all right? And another name of a wallet? Boost, okay. If you're using Touch and Go, you use the QR scan, and you're scanning on the Boost QR code, the money will be able to go through. So this is what ICTF is trying to do. But what is also very interesting behind the entire ICTF framework, it is similar to PSD2, which is Payment Services Directive 2.0 in Europe, which is the fundamental of an open banking ecosystem. So today, the transaction of information is reciprocal. Client and financial services provider. And usually, financial service provider would not share their data to any third-party provider because it is extremely sensitive. So with ICTF, there's a framework where third-party providers, in fact, wallet players or e-money issuance players, they are also considered as a third-party provider. They are able to come into the open banking framework to be able to share certain non-sensitive customer info to serve the end customers better. So eventually, all three parties are benefited. The financial service providers are benefited, the service provider will be benefited, and customers, because you get to see a more transparent information and compare different prices or products, you will be benefited as well. So ICTF is one of the very interesting initiatives being run by the government. Do it now. I think it's quite common with a lot of advertisement going on, where you don't have to remember your friends or your family members' bank account number, but some of their key ID, whether it's the IC, business registration number, or a mobile number, and the payment will be gone through. So these are some of the key fintech developments nationwide. If we put our site in the region, virtual banking or digital banking have come to a reality. I used to admire banks founders because if you look at a lot of banks in Malaysia today, they were founded 40, 50, 60 years ago. Right? You don't really hear a lot of new banks coming up, at least in the past 10, 20 years, not many. But with digital economy initiative, there is a new opportunity for entrepreneurs to aspire again to be a founder of a bank. But this bank has to be a digital bank because you can't compete with CIMB with their vast distribution network. And even what we call incumbent banks like CIMB, what I read and understand from the market is that they are also putting a lot of effort in embracing digitalization, so which is a good thing for us consumers. So in Hong Kong, HKMA, Hong Kong Monetary Authority, has already issued 8 licenses to 8 so-called virtual banks. And I want you to see clearly in the combination of these 8 recipients. It is very interesting for 2 reasons. First, the license is not just given to one entity. Of course, 4 of them, they represent only one company, but the rest are formed as a consortium, number 1. Number 2, you will see some of these names, they were not even in any financial services before. For example, PCCW, owned by Lei Ka-shing, they are in the telco business. All right? JD, do you know JD.com, e-commerce player? They are not really in the financial services sector. Mi, I think Mi is very common, Xiaomi. They are in the hardware business. But why did HKMA issue virtual banking licenses to these different players? I think this is where digital economy and also connectivity that I mentioned earlier come to play, where financial services would move beyond just transaction. It's really about understanding your data. Why are these companies selected? Telco company, do they have your data? They have all your data. Xiaomi, mobile phone provider, and manufacturer, do they have your data? They have the data and the technology. And of course, Ant Financial or even Zhong'an, they are already doing very good digital business in China mainland themselves. So this is in Hong Kong. Singapore will be issuing up to 5 digital banking licenses in near time. It will be broken into consumer banking and wholesale banking. In Malaysia, our governor has also committed to release the virtual banking framework or consultative paper or exposure draft by end of this year. So probably as early as next year, we'll be seeing applicants for digital banking licenses. In the UK, if you have kids or friends who are studying in the UK, I'm sure they'll come back and tell you, hey, in the UK, I don't use traditional banks, especially if they are undergraduate, there's a caveat. They will use digital banks like Monzo and the rest, where essentially is truly innovative. So this is also happening in the financial services, a highly compliant and regulated market. This is Alipay. Alipay in China. So I had the privilege, as I mentioned, to spend 2 weeks in China. So the first day I landed in China, the Alibaba officer brought me to open an account. We still needed to open a bank account. So they brought me to a bank started with C. Open an account, pump in the money. The next thing I did was to transfer the fund into my Alipay wallet, because that was in April. During then, they did not accept any foreign credit card. I understand that about 2-3 weeks ago, they opened out for your foreign credit card to be parked under Alipay. So after 2 weeks, I was talking to some of my other friends who were participants as well. So I asked, which is the bank account that you opened with? You know what did they tell me? They said, I forgot. I can't even remember. I thought my bank is Alipay. So this is how new business models, wallets, or even financial service providers in the innovative space has changed how consumers think about banking. And of course, it is not just about transaction. It is again about data. Data. If you are running Alipay or WeChat Pay, or why are these so many fintech players in Malaysia trying to acquire you as a customer? Because they want to harness and digest your data. For example, in Alipay, they get to know your billing relationship. They know exactly your payment transaction, your daily usage, taxi from one place to another. You can even buy a bullet train ticket using Alipay. You can even do a mutual aid insurance using Alipay. So it is all encompassive. It's highly inclusive. So this is how Ant Financial, which is the parent company of Alipay, has emerged as the world's largest fintech unicorn. They are valued at $150 billion, and these are their business models. In the past, how do financial providers do credit checking? It's tagged to certain database, Secret, CTOS, and the rest. If you are doing business credit, usually the data, you still get all the data, but usually it's in retrospect. It's 1 quarter later, right? Because due to reporting standard and whatnot. But with innovative business model like this, you get to know the credit scoring in a real-time basis. For example, when I was using this app in China, my credit scoring was 550. I could not borrow a power bank for free. But if your credit scoring, what they call 芝麻信用, 芝麻 credit, is more than 600, you get to borrow for more than 1 hour for free. So this is how they are evaluating you as an individual. And with that, they offer you personal financing. If your 芝麻 credit is higher, your rate or cost of fund or cost of financing is relatively lower. But if your 芝麻 credit was as low as me, because I will only spend a few days there, it was more expensive. So this is how they look at data. And also 余额宝, not sure whether you've heard of 余额宝. 余额宝 essentially is a feature in Alipay where if you are able to transfer the storage into 余额宝, you'll be able to get rewarded or interest. So 余额宝 today is one of the world's largest asset under management. And there's also a new concept, for example, this 相互保. 相互保 is something new. It was started about 18 months ago. It is a mutual insurance aid concept. In the past, insurance is all about underwriter and consumers. But with technology, Alipay has come up with what they call 相互保, where it's about mutual sharing. There are already 85 million users on 相互保, and they have released more than 200 transactions to help the poor and especially the B40 from the villages in China. So these are all made possible because of technology. So all in all, digital transformation is really about how do we play in a competitive game. And it must be able to help SMEs especially to raise creativity, to improve and increase revenue, to enhance efficiency and profitability, and also potentially disrupt the unknown. Because in digital economy, it is borderless. You get to import from China and sell locally more easily compared to before. You can run an inventory light or asset light business. For example, the likes of a number of game-changing models, they are asset light. So this is all made possible with digital economy. However, the transformation for SMEs in digital economy, I personally believe is not easy. So in Policy Street, I deal with a lot of businesses because we curate insurance and risk management scheme for them. And when I talk to them, they also tell me a few challenges and hurdles. And with that, I have summarized into 5 key points, which I think these are the 5 key steps to be able to embrace digital innovation effectively as a SME. The first, I think, we must lay a firm foundation on digital success. Assess your current state of innovation. You know, how open are you in adopting digital transformation? Or maybe some of you have already adopted digital items which are helpful in the business. And secondly, I think it has to be very realistic and be clear on the future model. All right, for example, the retailer that I saw and met in Hangzhou, they started as a fashion company. They opened many fashion outlets in different shopping malls. But over time, they understand the business has plague. They can't break through. So this is where they do 2 things. First, they started to sell online, riding on big avenues. Secondly, they work with a few cloud and IoT companies to install IoT devices where they are able to understand the customer behavior and data better. They know in this season which shirts or choices of apparels are so better, so they'll get their manufacturers to respond immediately in-house. So this is how they manage their data better, and they're more efficient. So secondly, I think second is the biggest issue, because it's very hard to manage and balance legacies with new technologies. Whether you have to overhaul your entire model or just reconfigure some of your areas of businesses that require certain boosts using digital. A few steps that you may take: embrace APIs, work with different FinTech companies, cloud technologies, but it has to be relevant to your business. Third, think about digital transformation on a holistic manner. It's not just one area on its own. Focus on end-to-end, not just on discrete initiatives, not just by selling things online and the sales will be increased. It takes more than that. Fourth is also a key challenge, because a lot of people think that digitalization belongs to the work of the tech team or the IT team. Last time when I was working in the bank, it was the same thing. Okay, IT transformation, tech transformation. KPIs, innovation team. Business team, they didn't mirror the impact or the result. And it makes adoption harder. So as a business leader, how do you get your team to work together? Even they are not from the IT sector. I think that's also very crucial. And last but not least, which again fall back to the number 1 value, which is connectivity. Don't build digital islands, meaning don't isolate your own and new digital initiatives. Create an ecosystem. How do you help your customers, your stakeholders, your shareholders, even your own business management officers? So with this, I believe an ecosystem of a thriving digital economy can be also realized in your own company as an SME. So with that, I summarize again. The most exciting and important thing in the digital economy is about data. How do you mine, digest, and interpret your data? Whichever SME does it the best, I think you will be able to win in this era of digital economy. So with that, thank you very much. It's been a pleasure.
Ladies and gentlemen, thank you very much, Mr. Wilson. Please remain on stage. Ladies and gentlemen, you may send in your questions via Slido. So key in the event code, which is #SMEForum2. Yes, we have the first question for Mr. Wilson. In respect of for unicorns, tech companies, startups, to what extent has investors over exuberance inflated these valuations? Is this sustainable?
I think the industry of venture capital and investment has matured quite a fair bit. My own company, I also raised funding, pre-series A funding from a Singapore-based Japanese investor about 2 years ago. So the investor that I dealt with, He's a more pragmatic person. He looks at numbers. He looks at market size. But there are also certain venture capitalists who look into market potential and scalability. And they are looking at the grand scheme of things where they would invest money, although the company may be still bleeding or burning money. So what they are looking actually is on a unit economy. The company may be losing money today, but as long as they are building something more achievable or with profitability in sight, this is where they will be considered by investors. And true to be told, if you look at Grab, I think in the past few years, a lot of people were criticizing, right? How, not just Grab, but a lot more companies. How could they raise so much money while they are still bleeding? But today you start to see they are not just in the e-hailing business. They are venturing into food. Now they are also in the financial services. They are doing a lot more things. And the founder recently came out to say that he is quite confident to see profitability in sight. So I think this is where there must be a balance between valuation game and also the core business models. And I believe our market is an efficient market. There are a lot of startups. If they are not efficient in their business model, they would not be able to survive in the near future. So that's number one.
The second question would be, it seems there is overcrowding in the e-wallet scene. Do you foresee more e-wallets coming in?
So yes, so I think Bank Negara has issued more than 40 e-money issuance licenses to bank and non-bank players. So will there be more money issuance licenses be given? I don't know. I am not from the authority, but I can understand where the market is heading to. I believe that there will be a consolidation. Even today, you can see who are the top 5 players in the e-wallet scene already, although there are 40 players. The active ones are slightly more than 10, but the leaders you can count, they are not more than 5. And eventually, I believe it will be consolidated to maybe top 3. So I think the key question will be, how can an e-wallet survive or thrive in this market? We only have 30 million population, and there are so many competitors. China, there are only top 2 players, WeChat Pay and Alipay, although they have 1.5 billion population. The key would be, what is your unique value proposition as an e-wallet? I won't name them, but I can see a few e-wallets, they are very clear in a distinctive UVPs. Whether they were tapping into their database, they were leveraging on certain things. This is belief where they will be succeeding in the near future.
All right, someone from Angry Bird. Wow, we got Donald Trump in the house, is it? How digital economy give advantage to agricultural industry?
This is something very interesting, especially in emerging markets, in Indonesia, Malaysia, or even China. So when I went to China with the Alibaba Netpreneur program, they brought us to a village where the businesses were in fact in 2 things. First is in agriculture, but it's not the farming or hardcore agriculture. They were involved in producing nuts, so-called the healthy nuts. But for the past many years, the economy of the village was not thriving because they only had a small market size. Okay, you can Google, it's called Pioneer Village. I think there are about 60 residents or 60 households in that village. How digital economy has helped this village was through 2 things. First, it took away the pain point or the limitation of a small market access. Now these 60 over household in Pioneer Village, they are able to sell on the e-commerce platforms nationwide, if not regionally. That's number 1. With that, the GDP of the village has grown tremendously. And secondly, there are also investment from the local municipal councils, because China, there's many layers. They work with the private sector to invest into agriculture technologies to help the production to be more efficient. So this is where manufacturing or smart processes are coming in. So it has opened up a new ballgame, because in the past, the second or the third generation from this village, they want to move away. They want to move. The closest bigger city is Hangzhou. They were moving away to Hangzhou or Shanghai, which is 1 hour away from Hangzhou, to seek a better opportunity. But today, with technology, they see opportunity as well. And the reward could be also quite lucrative. And this is only made possible with digital economy.
All right, thank you, Mr. Wilson. All right, next question from Iqmal Hanafi. I'm quite interested how innovation technology augmented reality like Instagram and Snapchat. Yet, I'm wondering how these companies generate revenue.
Oh, very good question. I think Instagram, they started off with really creating the viral effect. And they have won over the hearts of many millennials. And today, I think they also are putting a lot of focus in terms of their P&L, in terms of profitability. I don't have the key data, but you can see there are slowly and surely more advertisements on Instagram. But they do it in a more, I would say, a natural manner, right? You don't feel that it's more intrusive, but understand that in terms of revenue, in Instagram, it has been increasing. So the idea about all these tech companies is all about data, right? How they can access and reach out to millions or hundreds of millions of customers at the shortest point of time. And with that, they are able to cross-sell and upsell.
All right, our last two questions. Is that okay, Mr. Wilson? Last down two questions. All right. What is the easiest way to ensure the safety of our data or information?
Yeah. I think we are governed by a certain set of rules and regulations in terms of PDPA, in terms of Security Act or Financial Services Act. I think we must all adhere to all these compliance. But what is also important in the digital age is the information of your customers that you deal with, especially when in regard to payments and also the information that you store online. Because there could be malware attack, there could be hackers, leaking some of this online information. So I would encourage SMEs to look into cybersecurity. I think the government and also the regulator has been putting more focus in cybersecurity. How do you safeguard your online data, number one? And secondly, even cybersecurity insurance. How do you recoup back your business losses if a security threat like this takes place?
All right, our last question for Mr. Wilson. What is your outlook of the gig economy, short to long term, and how to be digitally competitive in this line?
I think the gig economy has opened up a whole new imagination for the future of work. In the past, work is really 9 to 5 or 9 to 6, or to some of you is 9 to 9 on 24/7. But with gig economy, I really have started to see a lot more young people who choose to take on a more unorthodox path to focus in their skill sets, but they offer this to a mass market. For example, if you are a coder, you can work on your own because you code for different companies, different businesses, different clienteles. You don't have to necessarily be attached to one or two entities. Grab drivers will be a very good example. The food delivery personnel, they are also operating in a gig economy environment. All right? So these are new imaginations and new opportunities for the business. And I believe the Star also carried a news report before on gig economy in 2020 onwards. They will be contributing more immensely to the domestic economy. So the question is, how do SMEs leverage on gig economy? For example, there are a couple of companies who do runner's job for SMEs. You can engage them using an app. So instead of building your own in-house HR operation team, perhaps it makes sense to engage with or outsource to these gig economy players to lower down your fixed costs, but to achieve the same result. So we haven't seen the full-fledged of gig economy development, not yet in Malaysia, but I believe in the next few years it will be growing rapidly.
All right, thank you very much, Mr. Wilson Beh.
All right, thank you very much.
Ladies and gentlemen, thank you very much, Mr. Wilson, for your enlightening session. All right, we will be taking a short break, and feel free to check out CIMB booth outside, and you will be back in the hall within 15 more minutes. Thank you very much.